Welcome to Daily Crypto Edge. Today is Saturday, December 27th, 2025, and we are staring down the barrel of the final and most critical trading weekend of the year. Now, this time of year is notorious for thin liquidity and wild price swings, which sets the perfect stage for something we call the weekend wick scenario. We're going to break down exactly what that is, what it means for Bitcoin and Ethereum, and most importantly, how to build a game plan around it. Let's get right into it. First things first, let's get a feel for the market's mood. And wow, the fear and greed index is sitting at a 19. That is deep, deep in extreme fear territory. You can just feel the anxiety in the air, right? A lot of this is probably year-end tax selling, but whatever the cause, this level of fear creates the perfect storm for the kind of volatility we're about to discuss. And that brings us to the main event, our core idea for this weekend, the weekend wick. So what is it? Think of it like a quick, sharp jab downwards in price. It happens on these low-volume weekends specifically to hunt for stop losses and liquidate traders. And then, boom, it often snaps right back up. For anyone who's unprepared, it's a brutal trap. But if you have a plan, it can be a massive opportunity.
Okay, so let's start with the king, Bitcoin. And honestly, the data here is telling us to be very, very cautious. The charts, the on-chain metrics, they're all painting a picture of weakness that we just can't afford to ignore right now.
When we look at the price action itself, it's not some dramatic crash. It's more of a slow, grinding bleed downwards. You can see it right here on the chart, just methodically pushing down, testing lower and lower supports. The momentum just feels heavy, It really suggests that we haven't found a solid floor just yet. And the on-chain data, well, it absolutely backs this up. I mean, look at this table. The price is stuck below its 50-day moving average, the RSI is weak, but the real red flag for me is the rising exchange reserves. Now, 2,000 Bitcoin might not sound like a lot, but it shows the direction of travel. Coins are moving onto exchanges, and that usually means one thing: people are getting ready to sell.
So, the big question is, what's the play? For Bitcoin, the answer is simple: patience. We are stuck in what I'd call no man's land. We're caught between support down at 82,000 and resistance up at 90,000. Trying to take a long position right here in the middle of this mess is just a low probability bet. The smart move is to wait. Wait for a solid test of that support or a powerful reclaim of resistance.
But now, let's switch over to Ethereum, because this, my friends, is where the story gets really, really interesting. While all this market fear is dragging ETH's price down with everything else, the data under the hood, the on-chain fundamentals, is telling a completely different and much more bullish story. This slide just lays it out perfectly. It's a tale of two coins. Where Bitcoin is slowly bleeding out, ETH is actually showing relative strength. Where Bitcoin is seeing coins flow into exchanges, hinting at selling pressure, ETH is seeing massive outflows. That's a huge sign of holding conviction. And while the Bitcoin whales are asleep at the wheel, the Ethereum whales, they're actively buying up these dips. It's a massive split in fundamentals. And the numbers here are just staggering. 120,000 ETH has moved off of exchanges in just the last 24 hours. That is a huge amount of supply being taken out of circulation and locked away. At the same time, we're seeing these large whale wallets adding to their stacks, and activity on layer 2s, the platforms built on top of Ethereum, is hitting all-time highs. This network is fundamentally humming. And this all just fits perfectly with the market psychology we're seeing. Go online, you'll see capitulation trending. You can feel the frustration from traders. But as this note points out, that point of maximum frustration, that's so often where you find a real market bottom. It's that moment the last of the weak hands finally give up, right before things turn around. Okay, so based on all that underlying strength, here's an actionable trade setup for Ethereum. Right now, we are in what I'd consider an aggressive buy zone. This plan calls for allocating about 15 to 20% of your portfolio here. You'd want a tight stop loss right below the recent lows, say at 23.50, to manage your risk, and you'd be looking for an initial take profit target up around 29.50. All right, so we've got our thesis. We are cautious on Bitcoin, but we see this fundamental strength in Ethereum. How does that all come together into a concrete game plan for the next 48 hours? Well, let's break down the most likely scenarios. We're looking at this in terms of probabilities. In our view, the highest probability, at 45%, goes to scenario A, that Sunday scam wick we talked about. This is where the market makers engineer that sharp dip to cause chaos before a recovery. Next up, a 35% chance of just a slow grind down. And finally, the lowest probability at just 20% is a genuine sustained breakdown below key support. So here's your playbook. You have an action plan for each possibility. For that high probability scam wick, you get ready by setting some deep limit buy orders, say for ETH around 2420, to try and catch that dip. If we get the slow grind instead, you just patiently dollar cost average your way in. And in that low probability breakdown scenario, you've got your stable coins ready to go, waiting to buy at much, much lower prices. This way, you're prepared for whatever the market throws at you.
All right, let's pull all of this together into a final recommended portfolio allocation, and then we'll finish with the single most important reminder for a weekend like this one. So based on everything we've talked about, our recommended allocation is actually overweight Ethereum at 40%, really leaning into that on-chain strength. Bitcoin is a 35%, but here's the crucial part. We're holding a solid 20% in stablecoins. That's our dry powder, ready to deploy if we get that weekend wick. And the last 5% is for a few more speculative altcoin plays. And this is the most critical takeaway from today. Remember, these are probabilities, not guarantees. Risk management is your only edge. If you want daily crypto market reports and tips for trading, subscribe to Trade Compass and turn on the notifications. Hit that bell so you never miss a move.